Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, over the last few years, we've been witnessing a growth in the number of people opting for insurance policies for both life and non-life insurance with an aim to secure themselves and their families from unforeseen events. So, a denial from insurers to settle claims at the time of any eventuality can cause a massive dent on our savings. Now, in fact, we've been receiving many consumer queries around claim rejections. And so today, we are going to try and address some of your concerns related to insurance and to learn about ways to ensure a seamless settlement process. Now, let's welcome Yashish Dhaya, CEO and co-founder of Policy Bazaar. Yashish, my first question is, can insurance companies reject claims?
Of course, they can, and they could, and that is why some claims get rejected. Otherwise, you would have automatic payment of claim the moment you press a button and the money goes into your account. And there's a reason why that happens. The average consumer really does not need to worry about it. The reason that happens is because there are all kinds of frauds that happen in the country. And one has to see it from the insurance company's perspective also. There are groups of people who, where the person's already dead and the insurance policy has been taken. Because in India, it's feasible to show the person as dead, a dead person as alive for some time. A death certificate can be made. Today, you can get a lot of certificates made in this country for some money, right? So, because it's not, all the records are not electronic only. So, we know of cases where there were students who were studying in their college, but they were also sending health insurance bills, college students who were also sending health insurance bills because the hospital had connived with them and the hospital was okay to submit some bills. So the insurance companies are primarily trying to make sure that nobody frauds them. And that's the principal reason. So basically the
checks and balances.
The checks and balances are there.
They have to maintain certain checks, otherwise they'll go into a total loss.
Absolutely. And if you would notice, most of the claims that get rejected in life insurance are in the first 2 years of the policy. Why does that happen? Because either the person was already dead, or the person was on their deathbed, or the person knew that they were going to expire in the next 1 or 2 years. It's very difficult to predict that one is going to expire 3 years from now. That eventually everybody is going to expire one day, right? So that's the truth. But it's very difficult to predict beyond 2 years. So most of the investigation of fraud happens in the first 2 years, which is also the reason why when you look at some of the claims ratios of companies, people who have a 2-year history will obviously have a much higher claim rejection rate because they have rejected all the frauds, unless you want them to start paying for frauds. So I remember cases which, for example, one company, Aegon Religare, for example, actually put the cases that they had rejected on their website, that why they have rejected them. Because at one point it seemed like they had a high claims rejection. And the claims rejection was obviously because they were getting some fraudulent claims. But because their overall claim policies were small and the claims were few, it was looking like a very large percentage of the total claims. But that is bound to happen in the early years. And if you have 50 years of claims history, then of course the early claims are very few. And so the claims rejects are also very few. But that is the basic philosophy. Of course, it's a large amount of money that's being paid. There is a clear moral hazard in trying to make that money. And usually you will find that the people, there's a saying in the insurance world, that when a fraud claim comes, its paperwork is almost perfect. It's usually, and that is quite true because the paperwork is well set, it's quite professionally done.
So talk us through Amendment 45, because from my reading of it, it seems that it's going to be virtually impossible for companies, insurance companies, to reject claims if all the paperwork, as you mentioned, is correct.
So see, a couple of things I would mention before I get into Amendment 45. Let us just think about why were claims rejected. Claims were either rejected for misinformation, misdeclaration, and serious misinformation and misdeclaration, not something that was small and kind of can be missed out. Primarily on lifestyle and health kind of concerns. There were also some other mechanisms by which claims used to be rejected. So many companies will have, you have to report a death within 30 days. You have to report within 24 to 48 hours of getting into hospital. I think that those are wrong reasons. Those were wrong reasons for rejecting claims, because it's okay, somebody took some time. Why should one reject on that basis? Maybe the paperwork wasn't complete. So I think all those nuance-based rejections were just incorrect. Right? Now what Amendment 45 does is it puts the onus. So it basically says after 3 years.
Now, Amendment 45 is basically the amendment to the Insurance Act.
Yes,
I just want to clarify that.
Yes,
right?
that's the amendment to the Insurance Act, which essentially says that after 3 years, you cannot reject a claim on grounds of misinformation or misdeclaration. So if a person has declared that they don't have cancer, but they actually have cancer, you've got 3 years as a company to check that out. If in 3 years you haven't detected it, you haven't done your due diligence, after the 3 years are over, the customer will get their claim. Even if this is to see, essentially all those claims were anyways getting caught within the first 3 years, because the death used to happen within 3 years when there was such a serious situation. But and there was almost no claim rejects after 3 years. But what this does is gives confidence to the consumer that in case you have see, what's happening is claim is getting rejected of a fraudster. A person like me is getting fear that, you know, I will not get my claim or my family will not get the claim. That fear is not required. So it's to give that confidence that it said that after 3 years are over, if the company has not done its due diligence in the 3 years, they have no right to reject the claim on the basis of misinformation or on the basis of anything that is wrongly stated. All that has to be due diligence upfront. That is what it says. Right,
Yashish, I've got a statistic here from the IRDAI, which says the LIC has a settlement claim ratio of 98.14%.
Yes.
Whereas private insurance ratios have come down in the recent past. So can you shed some light on that?
Yeah. So the private, overall private insurance companies' claim settlement would be about 92%. And the LIC's claim settlement is much higher at about 98.5%. See, one should, I think it's an important thing that claims are paid by everybody. But I think one should not be too misled by data alone. And I'll give some examples. LIC has been around since 1956, whereas the private companies have really gotten into the business in 2003. So there is 60 years of earlier claims. Now, somebody who bought a policy in before 2003, obviously, and if they're expiring now, the chance that there's a fraud is very, very unlikely. Extremely, it's impossible, right? That somebody plans in 2003 that they're going to expire in. So the fraudulent claims are going to be higher in the private sector. And specifically for the very young companies which have just done 4-5 years, they would have an even higher ratio of those claims. The second thing I wanted to point out, I think it's very important that the IRDA puts out this statistic as well. Most of these are cashback plans. These are not really life insurance as in life insurance. So these are not really standalone life insurance plans. So it's not like somebody got a 1 crore cover.
Oh, so you're talking about, okay,
so the
that
statistic,
distinction you're saying has not been made.
The statistic is around plans where you've invested money for 15 years or 20 years, somebody's expired, and they have got their money back. Remember, that was their money. It's already in the bank. I can pretty confidently say that in a vast majority of the cases, that money had already been accumulated, so the sum assured had already been accumulated to a large extent. So there's no massive deal in paying out the claim, and the customer has already paid. So what would have happened is the customer would have paid you 10,000 rupees every year for 20 years, and there would be a 2 lakh,
so basically money back.
It's more of a money back scheme. Right. The pure life insurance plans don't even account for 0.5% of all insurance plan sales in this country. Last I checked, it was 0.458%.
How does that compare?
To the rest of the world.
To the rest of the world, to say the US.
So in the US, it would be about 50%. In most of the developed world, it would be about between 30 to 50% of the policies would be pure life insurance policies, and the rest would be pension plans and all that stuff. But because of the push drive by the distribution community, nobody really had an interest in pushing term. So if you speak in the insurance industry today, it's like, what's the point of selling term? It's a 5,000, 10,000 rupee policy in which you have to put so much effort. and eventually the commission the agent is going to get is going to be very small. So this is a pull phenomena. And this is not just India, it's most of Southeast Asia has this problem. Most of Southeast Asia is largely lopsided in the favor of savings kind of products, not in terms of term insurance. So all I'm saying is life insurance in India is only 0.45% or less than 0.5% of the overall industry. Now somebody can technically catch me out and say, no. Even the other savings products are actually life insurance. The amount that is going towards life insurance of those products is not even 10% of what is being invested. And 10% I'm being very generous there, is probably 1 or 2% only. The mortality charges on any plan are the only life insurance that you're taking. That is the only cost you're paying towards life insurance. So all I'm saying is I think these statistics are quite, they have to be watched very carefully. I think both the time type and which type of life insurance policy are you paying for. Someone like an Aegon Religare would have a very significant percentage, and I'm sorry, I'm singling out a particular company. Right. They would have a very significant percentage of pure life insurance plans vis-a-vis life insurance policies. Whereas I think someone like an LIC would have a very, very small percentage. I would say not even 0.1% of the plans would be pure life insurance plans.
Now let's talk about the options that a policyholder has if a claim is rejected. You could also go into some of the aspects of how much time they have to file a claim, and what is the kind of paperwork that's needed.
Okay.
So
see, one comfort that the customer must always take is eventually the Indian law is above the insurance community. So one can eventually go to a high court or a Supreme Court also, and there have been cases where people have gone there where the insurance product did not make sense. I think in case a claim gets rejected, the first thing to do is read through the rejection and see the basis on which it has been rejected. Right? There are steps to be taken before rejection as well. You can then appoint your own surveyor or independent assessor who can come back with a different opinion. And insurance companies usually take that very seriously, because that first of all indicates you're not taking this lying down, you are reacting in a very professional manner, and secondly, it is the opinion of one professional against another, and they do have to take into account that that view. In case that is also not heard.
You'll come back to Policy Bazaar. With me is Yashish Dhaya. We're talking about the claims process. So you were talking about the claims process. Yeah. You said you can get an independent assessor.
Yeah, that should be the first step. So the first thing is read what's been written. Try to find the flaws in that argument, because many times there will be flaws. But if you're really serious, then get an independent assessor. The independent assessor can give his own report, and the company will look at that more seriously. In case the company still does not act in your favor, then you go to the ombudsman. In case the ombudsman does not act as the IRDA, in case the IRDA is not able to help you on the matter, you would then go to
so there enough
the High Court and then the Supreme Court.
Remedy.
Yeah. What I have really seen working many a times is do reach out to the senior management of the companies. Because many times what happens is people have been trained over the last 30, 40 years to look at things in a certain way. And they are, like it happens with us in many government offices, etc. You don't have one paper and you're being kind of troubled for that. In those kind of situations, just reach out to somebody who's, more senior, who can take a more pragmatic view around this, has a little more authority, maybe the CEO of the company or one of the CXOs of the company. And they should be able to get it done usually, because nobody wants to spoil the company's name, and that's what the companies are set up for.
And then go through that entire process. But very quickly, before we take viewers' questions, Yashish, what are your tips for a seamless claim settlement?
I think paperwork is very important. So depending on what kind of claim it is, if it is a health insurance policy, having all the medical bills together, having the health history of the person for the last 6-8 months with you, in fact ideally 3 years with yourselves, having all the doctor's notes there, all that helps, and reporting in time, making sure you report in time. At the same time, if it's a life insurance policy, one of the biggest issues with a bulk of the life insurance policies is nominee verification. That is the nominee. So having his identification or her identification papers. having a police report, a post-mortem report. All of these are basics that need to be there. In addition to that, health history, sometimes even work history. If the person was working, then the company wants to know that they're working, because if the person was working and it can be shown that they're getting a salary every month, etc., then it's quite clear they were living also. So those pieces kind of help put together, but every company has a list which is somewhat different from each other. And one should read that carefully, put all the documents together, and be careful of time. See, I'm sure if you're not able to put the claim in 30 days and it takes 32 days, that's not such a big deal that your claim will get rejected only on the basis. But why create that pain? There's enough stress already. Right. Try to get it all done within the 30-day period. Get it done as quickly as possible so that it can be reported. In health insurance, do report upfront, because health insurance companies get very suspicious because I just gave you that example, right? There was a student who was giving medical bills. Now, what they want to check is, are you actually in hospital? And what they also want to do is sometimes speak to the doctor and figure out if the doctor is over-treating, because over-treatment by hospitals is a big, big pain point for insurance companies. You know, that's why they want to know early, and they get very suspicious if you're not informing them, because they say, oh, that means there's some kind of fraud going on, that the person is informing after the event, rather than before.
Right, well, we've got time enough for one or two questions maybe, but Subir Basu, who's 43, has asked us to recommend a health insurance plan. He's currently covered under a group health family floater plan of rupees 4 lakhs. He wants to know if rupees 3 lakhs of individual health plan is sufficient for him and his wife. He's thinking of opting for a super top-up as well, plan worth 15 lakhs alongside. Now, can you recommend that? He also is looking for critical illness, so he wants a really comprehensive view from you, Yashish.
Yeah, so I think he's got a 3-4 lakh rupee cover from his company, which is not an insignificant cover. I would recommend the super top-up, because the super top-up will allow him to take the coverage up to about 15 lakh rupees for a fraction of the cost. But more importantly, take a super top-up where when you retire, it also covers the base amount, because remember, your health situation may deteriorate. For most people, it does deteriorate. And by the time you're 60, people start finding it difficult to get health cover. But if you take the super top-up, which allows you to take the base coverage when you get to 60, 65, as you retire, that is really recommended. And definitely take a critical illness plan. Take a standalone critical illness plan, as large a plan as you can get and afford, because critical illnesses are the ones that are going to cost the most. And many of these plans also check, which kind of a plan you're taking. Some of them are indemnity plans, some of them are... So some of the plans will pay you on expenses. Some of the plans will pay you on event occurring. So in case a cancer happens, then the individual gets 10 lakh rupees or 5 lakh rupees straight away. So just check that. I think the latter are better, because then you have the cash and you don't need to get into individual bills, etc.
Thanks, Yashish. Last week we asked you a question. Insurance involves transfer of A, risk, B, ownership, C, liability, and the winner is Rajneesh. This week's question is, which is the largest insurance company in India? You can tweet us at Twitter at PolicyBazaar_in. You can email us at queries@policybazaar.com. Thanks a lot, Yashish, for joining us on our show, and we'll see you again with another episode of Policy Bazaar. Goodbye.